Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
This is your host, Alicia Debrell from Insight Media. Today's guest is #1 bestselling author for his new book called Passive Investing in Commercial Real Estate. He helps real estate passive investors to become better and smarter investors. And his name is James Kandasamy. Hi, James. Welcome to the show.
Hey, Alicia. Very happy to be here.
No, congratulations.
Thank you.
That's really a huge feat for sure. So I want to dive right into this. Can you tell me a bit about yourself and what made you want to get into the real estate arena?
So let me start with telling about my background. I started with electrical engineering. I have an MBA, and right now I have a CCIM, which is a black belt in commercial real estate certification. We started on real estate starting in 2013 with the single family houses and moved to commercial multifamily, which is basically apartments, complexes, in 2015. And from there until now, we own around 1,300 units on our own, together with our passive investors, but we are the general partner. And we are from Central Texas. And what made us get into real estate? Well, real estate is a good tool for us to build wealth quickly, right? I used to work on a corporate world for past 22 years before I resigned from that world 1 year ago, and now full-time into real estate.
I love it. So I have to ask the obvious question. How does it feel to be a #1 international bestselling author?
It feels very fulfilling because it's a great fit for a person like me, right? I mean, even English itself is almost like a second or third language for me. And if I'm able to write a book and made it an international bestseller, it is a great feat for me. I'm very happy.
For sure, definitely. And I actually want to back up a second and talk about, you went from single family to commercial real estate. What made you make that change?
I think we had 11 single family, maybe 13 single family. We had 2 of it were flips, right? But we had 11 rentals single family. It was doing good, but the amount of work and the limitation on scale, right, prohibits a lot of growth in that space, right? So we can only go up to 10 or 11 single family houses with a traditional Fannie Mae loan. So we realized there's a limit in terms of scale, and we know multifamily is a similar model, and it's more of a business and it's on a commercial space. And we move on to multifamily, right? And in multifamily, you can basically do a value add strategy where you go and put in your own, ideas and strategies and business plan to improve the operating income of a multifamily, and that's where the value increases tremendously based on the cap rate or capitalization rate of that asset. Whereas in single family, you're limited by the comps surrounding that particular house. So you basically can build a palace in the middle of a single family neighborhood, but the palace worth would be similar to whatever the houses surrounding it, right? Maybe $10,000 more, right? So, but in multifamily, you can basically increase the net operating income by double compared to any other property surrounding it, just by doing a lot of creative methods. And you can increase your equity by 2x or 3x just by doing that. So multifamily gives a lot more scalability, a lot more ideas for expansion in terms of the value and equity buildup. And that's why we love multifamily.
So it's definitely about the growth the growth ability and not being, closed in onto a single family.
Correct. Absolutely.
So what made you want to write the book, Passive Investing?
So we are syndicators. Basically, we raise money from busy high net worth people to invest 50 to 100,000 per person, and then we raise all the money from this what we call as passive investors, where they are passive, we are the active investors, we are the GPs, they are the LPs, which is limited partners, right? So what I've seen in this space in terms of passive investors, a lot of them want to get into real estate, but they just don't have the knowledge, right? Or it's a lot about hearsay, right? They hear about someone getting into real estate, making money, and they have this fear of missing out, what I call as FOMO.
Yes,
And
FOMO.
because of FOMO, a lot of people get into real estate, half blindfolded or fully blindfolded, right? So what I realized is completely lack of knowledge for passive investors on how to become a smarter passive investors, right? So in syndication commercial real estate, there is many different types of deals that comes in, many different sponsors, many different types of deals. And I think it's important for them to really, pick and choose their deals based on the deal and the sponsors to match what their investment cycle is going to be, or the investment success is going to be, right? So, as I said, not all deals are the same, right? So I wrote this book to make sure they're able to get that kind of they're able to make that kind of decision matrix when they invest in a syndicated commercial real estate deals.
Okay, so if somebody's reading your book, and it's probably, am I right? It is basically educating the investor. So, is that correct?
Yes, absolutely. It's basically educating the passive investors.
Okay, and so what key elements, if an investor read your book, what are the key elements that they will walk away with?
So they would walk away on there's many things to walk away from the book itself, right? But some of the key things they would walk away is, how do they get started, right? How do they get started as a passive investor, right? And what are the avenues that's available, right? And there's many avenues right now available with social media, with websites like BiggerPockets or any other websites, which is has a lot of investors going in, and it's free to tap into, right? There's meetups, right? There's paid investment clubs. There is free free local investment clubs as well available for them to get started. And there are ways to which asset class should they choose, right? There's multifamily, there's office, there's warehouse, there's self-storage, there's mobile home. Which one are they going to choose, right? So I did outline what are the pros and cons of each asset class in my book. So they can basically, as a passive investor, you can go into any asset class, right? And what are the timing, right? When do you buy and sell, right? When do you invest? When do you start? And when do you sell, right? It's important for them to know that, right? Some of the other key takeaways is how do they match certain deals to their own personal investment cycle, right? So someone who's young, who doesn't have a lot of money, right? What kind of deals they should be looking for compared to someone who's more, later part in their life, older, and they have a lot of money to invest and they want to have less risk, right? So what kind of deals they should look for? So it basically gives an investor on the choices of deals that they have and what they should be selecting for their own personal goals, right? So it's important to do that because, as I said, that not all deals are the same, right? And one of the other key takeaways is which kind of source of cash do they look for, right? Is it cash? Is it IRA? Is it something else called qualified retirement plan or QRP? Which one they should choose, right? So there's many different choices on what kind of investment they can make, especially with real estate, right? You have funds coming from different avenues, and how you can invest, right? And the other thing they can look at is how do they evaluate different types of deals, right? Based on the metrics that's presented to them. Is it cash flow? Is it equity multiple? Is it something called internal rate of return or IRR? So they can look at different terms and try to decide for themselves on which one is the best for them. So these are the key takeaways from the book.
And I was going to say, you give all of those different scenarios in your book, correct?
Yes, absolutely. I've given a very detailed explanation, even though a lot of it is very technical, but the way the book is written is very, very simple to read, and it's very a lot of complex concepts have been laid out to concepts were very easily understandable to anybody out there.
Anybody who's not in the real estate game, you know what I mean? Because
Yeah.
we all have people who are investing that don't have the time to learn the craft and invest in the craft. This is a great book for them to be able to learn the basics.
Yes. Even though they are not in real estate, if they read this, they can understand a lot of things on real estate, how to get started, what are the key terms in real estate that they need to look out for. So it's for people who are in the real estate game and who are people who want to get into the game.
And the know-how, and this book gives them the know-how and how to do it.
Absolutely.
And that's incredible. And the next two questions is kind of, I'm going to blend them into one, because I want to know what type of, clients or investors that you work with. And I want you to go into more detail on what you mean by a passive investor, because somebody who's not in the industry or doesn't know that term would not understand that they would be qualified as a passive investor. So can you break it down for me?
Sure. So the type of client is not really, I wouldn't call it clients, I would call it partners, because they are basically the owner of the assets as well. So even though they are considered passive, right? So if I go into what is passive, let me clarify who do we work with. So we work with people who have established relationship with us. So if you want to get into the game, start establishing relationship with us because we like establishing relationship. You want to know who are you investing with. At the same time, we want to know who's our partners are in the passive side of things, right? So there's two types of category. One is called sophisticated investors, and the other one's called accredited investors, right? So accredited investors are people who has more than $1 million in net worth without including their primary residence, right? Or they should be, if they're working on a W-2 job, they should be earning $200,000 if single, or $300,000 if married for the past 2 years. Then you consider them as accredited investors, right? So we can take unlimited accredited investors based on our offerings. Usually we do something called a 506B based on the SEC rulings. And SEC is Security and Exchange Commission. So we have a lot of paperwork to do to get people to invest into this. And we also take sophisticated investors who doesn't fit into the accredited definition, but we're limited to like 35 people of those, which is, is still a really good number for people to come in. So we usually take sophisticated investors, which I can define as not accredited, but they have good knowledge of good knowledge on decision making, whether an investment is a good deal or not, right? So I did outline a lot more details on how does these two groups work. But in general, we work with sophisticated investors and accredited investors, people who have like $50,000 to $100,000 to invest. And this is investing passively. So let me clarify what is passive. Passive means you give us the money and you look for the monthly report that we send, and you receive distribution on a quarterly basis, right? So we do give a lot of leverage for our passive investors to vote on big decisions, such as sale, refi, or something major that we want to do with the assets. And that's it, right? So passive means passive, right? So passive investors are people who are busy making money in their business or their professions, but they don't have time and they still want to take advantage of the tax advantage that real estate offers while earning cash flow, 7 to 9% on a per annum basis, and like 20% per year for total investment cycle. So these are the people who can work with us as a passive investors, and there are a lot of them. A lot of people want to take advantage of the tax benefit, want to make that amount of 20% return per annum, but they just don't have the time or the skill, right? So they come and partner with us, who are general partners, who are the expert in this field, and they still get the benefit of real estate investing, especially on the commercial side of things.
Okay, I'm going to dig into the answer a little bit more. What are the tax benefits for a passive investor?
So there's two types of tax benefit to passive investors, right? Especially if you're just completely passive, you're not in the real estate game, you're not someone we call as real estate professional. If you're a real estate professional, like brokers, people who have spent a considerable amount of time in real estate, including owning rentals, they would be considered as real estate professionals, right? They get a lot of benefit. They get, you know, depreciate something called depreciation, where the whole depreciation that we get on an annual basis on commercial real estate is minused off from the active income, right? And also on the passive losses, right? If they have lost in some other, if they have gained in some other deal, and they can take the losses of the depreciation, which is a paper loss. It's not really a loss, but it's a paper loss as per IRS definition. They can minus off on the active and passive gain. But if you are not a real estate professional, basically the benefit comes in of something I call as a conversion from a high tax bracket to a low tax bracket during that period. So basically what happens, let's say your tax bracket is 37%, when you invest in commercial real estate with the depreciation and also with the mortgage interest deduction, basically that 37%, that's a huge potential of that 37% becoming 26%, 25%, which means you are basically reducing your tax, through a real estate vehicle, using this, depreciation and interest rate losses, and also loan amortization losses. There's three vehicles which cause a loss on paper, and because of that loss, your tax bracket reduces from 37% to 26-25%. So that's a huge reduction in tax, especially for people who are paying a lot of tax. Absolutely.
For sure. So why do you think people don't think it's possible to passively invest in a real estate transaction and make money?
I think there's two reasons. One is they do not know about this vehicle. So that's why I wrote this book, so that a lot more people...
They need to pick it up.
A lot more people will go and read the book, right? It's out there, available in Amazon. It's going to be in the shelf, and people can read it, right? Because there is ways to do it, right? The second is, there are some people who just do not want to give their money to someone else to run the show, right? But I know a lot of people in the industry. A lot of people are getting huge return by trusting people who I call as sponsors to manage the investments and make money for them. So, but I think if you read my book, you'll get the knowledge, and you'll have that confidence to at least get started networking and getting into the game.
So, and that kind of brings me into the next question, which is, how do people become a smarter investor? Is it just by reading your book?
Reading my book absolutely would take you at least 70 to 80% smarter compared to where you are right now. Even my experienced passive investors who have invested millions of dollars, when they read my book, they say, "Oh, I didn't know that," right? I mean, keep in mind, for the past 9 years, we have been on the longest expansion cycle. So, people who have made a lot of money think that they are smart in making money, but they also have to realize the market helped them a lot. Right. So, but reading the book would give you what's the theory behind a lot of real syndication, real estate cycles, and real estate investment. Right. So, by reading my book, yeah, absolutely. But I think they should, as I mentioned in the book, they have to go and network, go into these websites, or go into meetups, and network with people who knows this, who have done this. Then they will get to know a lot more details on what's happening out there in their local submarket and nationwide as well.
Okay, so I want to ask this one. So what type of options, if I just to say I was worth, millions upon millions, what kind of options are out there to become a smarter investor, and why would they want to get into a syndication deal?
So a syndication deal usually is commercial real estate, which means it's a much larger purchase amount, and your depreciation is going to be much larger as well, which means your tax is going to be reduced a lot more as well. and they can get into any syndicated commercial real estate, right? I mean, we are specialists in we specializes in multifamily, which is basically apartment syndication. We go and buy, apartments which needs work in terms of either management or in terms of capital injection to cure the deferred maintenance, right? So we do something called value add, which means we go and buy this distressed, not say really distressed property, lightly distressed property, and improve them to bring it up to market value. So they can invest in this syndicated commercial real estate, any asset classes, as I mentioned in my book, but we are specialized in multifamily. So, and that's what it is, right?
No, and that completely makes sense. So tell me this: give me 5 different things that someone reading your book will learn to become a more informed investor, and make a better judgment call, because there's so many options out there as far as real estate investing goes.
Absolutely. There's so many options, absolutely, on real estate, but this is the only book that just focuses on passive investor perspective. So I don't think there's any other book right now in Amazon or anywhere else that talks in terms of passive investor perspective. There's a lot of books which talks about how do you buy real estate, or how do you buy apartment buildings as well, or how do you buy office. But a lot of passive investors do not want to do that, right? They just want to invest passively into someone else's deal, right? So 5 different things would be like how to get started, which I think is very important for everybody to know. There are many ways to get started. Sometimes you get started in one small group and you're cocooned into that group, thinking that is the best way to do things, right? So you have to get out of your network and go and explore other avenues, other networking tools, right? So that's first thing. Second is what kind of assets do they want to choose, right? Because different asset has their own nuances in terms of returns and how does it play in terms of different market cycle. So I've outlined very clearly on that. Third would be how does this investment matches their own personal goal, right? So it's very important to choose an investment that matches your own personal goal, right? So, some investment will give you a lot of equity build-up. So you can 3x, 5x the equity that you have. Let's say you have 100,000, you can make it into 500,000 or $1 million in the 10-year period. Versus there's some investment which have $1 million, but it's going to give you 10% cash flow, but not much of equity build-up, right? So it's important for them to choose what matches their cycle, right? Fourth would be, what are the market cycles they want to look for, right? What is the timing of it, right? And when they should invest a lot of money, when they should put a break on it and all that. And I would say the fifth would be, what are the types of capital sources they can do, they can look at to invest in this deal, right? And let me add one more, the number 6, which is basically how do you look at different metrics that's being presented to them? How do you analyze different metrics that when a sponsor come and show you, hey, this deal is going to give you 10% IRR, 20% IRR or 10% cash flow and 2x equity multiple, what does it mean, right? How do you want to look at that, whatever presented to you, and how do you want to choose whether it's something that you really like it or not, right? So rather than I like the sponsor more than the numbers, right? So these are the things that they will definitely become more informed investors based on these bullet points.
Well, I like 2 things from your answer. First of all, you like to underpromise and overdeliver. Second, I like the fact that you're giving me a 6th option when I've only asked you for 5. You know what I mean? I think that's great. And I think that anybody reading this book who is an investor and they don't know where to go is really going to be able to make an educated decision. And I think that's incredible.
Absolutely.
Okay, so now I'm going to ask the opposite version. Can you give me maybe 1 or 2 misconceptions that an investor may have about, jumping into the real estate game?
I would say there's a few misconceptions, right? So the first one would be, they do not know about it, right? So there's a lot of materials about stocks, right? About bonds, options, right? There's a lot of information. You Google and you see, and I can't blame them. There's a lot of information because there's a lot of companies make money out of stock investing as well, right? So the more transactions being done on stock, there's a lot more companies which gets to make money as well. So these companies do generate a lot of reports, educate people, right? Whereas in real estate, you don't have a lot of knowledge, right? So, I mean, as I said, that's why one of the reasons I wrote the book for passive investors, right? And people think that real estate takes a lot of time. I need to go and buy a rental. I need to manage it. I don't want to deal with tenants and toilets, right? So they think that they have to be on the driver's seat. But in my book, I mentioned you can be a very, very smart passive investors, right? Where you partner with someone else who's called a sponsor and you can make money. So these are the two big misconceptions I think that is, people have when they don't get into the real estate game.
And that completely makes sense. So if you had one or two pieces of advice for somebody who is thinking about jumping into the real estate game, not sure, uneasy, they're like, okay, we see all these people making money and then there's so many options. What would that be?
I would say, of course, read my book. It's only $9.99 Kindle and $15 physical book. I'm just
and it's the number one international best-selling book, so they should read it.
Absolutely. I mean, it's just mind-blowing to me. People go and, people have this FOMO, right? Fear of missing out, and they hear someone invested, and now they want to invest $50,000 into a deal that they do not know, or they do not know about that whole commercial real estate space, right? And they should just spend the $15 on physical book and just buy it. And I also have it in Audible as well, so that they can go and buy that and read it if they are not a physical book person, right? Second thing is just go and start networking, get to know, who's in the game, who's in the meetup, and how do they get started in the game, and just get to know the business itself.
That totally makes sense. And I have to finish this off because, you have a number one international best-selling book just for investors and educating them. So if somebody wanted to get a hold of you, let's say they read your book or they just heard about you, how would they go about doing that?
It's all in Amazon. So we have 3 different versions, as I mentioned: Kindle, physical book, and audiobook. They should be able to find in Amazon. Just go and look for passive investing in commercial real estate. Insider Secrets to Achieving Financial Independence. They'll absolutely will get the book.
Okay. Is there any websites or phone numbers they can call?
Well, you can't call for the book, but you can definitely get hold of me. My website is achieveinvestmentgroup.com. Achieveinvestmentgroup.com, like achieving a goal, ACHIEVE. And my email is james@achieveinvestmentgroup.com.
Love it. Well, guys, you have just heard from a number one international best-selling author, and this book is unique because it focuses on investors and educating them. And it's probably 1 to 2 that are out there that are in this field. So please go out and get it. Jump on Amazon, check it out, and reach out to James. James, I really, really appreciate your time today and your education. And the fact that you wrote this book is amazing. And the heights that it has reached is incredible. Congratulations.
Absolutely. Thanks for having me here, Alicia. Really happy to add value.
Thank you, James, so much. All right, guys. This is Alicia DeBrell from Insight Media. Until next time.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.